all of this has been transpiring, so to speak, the Dow Jones Industrial Average is on absolutely nothing. So come on in, Bob Dahl, who is one of the big names in the financial world. Bob, welcome to the program. I used to call you, many years ago, I admit this, many years ago, I used to call you the $1 trillion man because you, I believe, managed about $1 trillion. I mean, are you a $1 trillion man still?
No, we've given some of that money away, Stuart.
Okay. You've not joined the Bernie Sanders campaign, I do hope. Now, can you explain this to me? We've got this turmoil in Europe, the attacks in France. We've got Japan now in a recession. And we've got the Dow Industrial Average doing virtually nothing. I thought there would be a sell-off this morning. Can you explain why there is not a sell-off?
Yeah, I would have expected more of a risk-off day as well, Stuart. As you probably know, before the market opened at 9:30 here in Eastern Time in the U.S., we had a pretty big sell-off in the futures, but it came back before we got the opening of the cash market. Look, these events, whether you go back to 04 bombings in Madrid or 05 in London, or the USS Cole, or the Libyan embassy, these things tended to come and go from a market standpoint and really didn't have a lasting effect at all. Yes, it is more telescoped here. It is only the 9/11 and way back when Pearl Harbor where you had a long-term impact. The markets are assuming that it's going to be business pretty much as usual, rightly or wrongly. Now, if there's another attack, I need to talk again. But absent that, civilization comes back to working together again.
Now, is it possible that with the declaration that there is indeed now a recession again in Japan, and there's probably going to be a significant slowdown in Europe because of these recent events, certainly in France, is it possible that because of that's what's going on, that the Federal Reserve will take another look at raising interest rates in December? Is it possible that that's what pushes our market higher?
Possible, yes. I still think this event alone will not cause the Fed to alter its course of most likely starting in December. When you think of the employment numbers we witnessed here, some more evidence even in recent weeks that inflation is moving toward their desired 2% level, I think it is still more likely than not than the Fed goes. Is it a lower probability today than it was Friday? I'd have to acknowledge that, but I think it's still comfortably over 50%.
It would be a gutsy move, though, wouldn't it, to raise interest rates in America when the rest of the world is clearly suffering big time. You don't normally raise interest rates when you've got a 1.5% growth rate at home and an unemployment, people are out of the labor market. You don't normally raise rates in that environment, now do you?
Well, I think, it will depend how things progress from here. I'm assuming that Europe will continue its modest economic recovery. Now, if all of a sudden all the borders get shut and there's insular activity on the part of the governments there, then it's a different consequence. But we don't know any of that eventuality. And the weakness in Japan, that's not new news either to the Fed.
So if things get worse in Europe, and I don't mean another attack, I mean the closing of borders, the repelling of the Muslim refugees, if that happens, then you could see some fallout in our market?
Yes, for certain. Obviously, Europe's an important market to the United States, and if that weakens noticeably on the back of this because governments respond, as you know, traveling within the EU is very easy. If that begins to change, we'll have more issues, particularly around travel companies and tourism, etc. Those companies are already being hit a bit, as you know, today.
Bob Dahl, what a pleasure. Thank you very much for being with us today, sir. Much appreciated.
Thank you, Stuart.
Now,